Welcome to the Senior Scoop, where experience meets community. Hi, I'm Deborah Samuel.
And I'm Kelsey Samuel. We're your hosts, bringing you real stories, trusted advice, and expert tips for seniors and their families right here in beautiful Santa Barbara.
Now, let's meet the incredible team behind the scenes at SBSOS, making it all possible.
The Senior Scoop is proudly brought to you by SBSOS, Santa Barbara's support network for seniors. Visit sbsos.care or call us at 805-946-0060 to learn more.
Now, let's dive into this week's Senior Scoop. Hi, welcome to the Senior Scoop, where today we are going to be interviewing Jon McCuskey from Prosperity Mortgage here in Santa Barbara. Thanks, Jon, for being on the show.
Oh, happy to be here, and thanks for having me. It's always fun to get on a podcast rather than just listen to them.
Oh, absolutely. Well, there you go. Well, we're here at the Senior Scoop Studios, sponsored by SBSOS, our partner, and we're really glad to have you because we're going to be talking about all things mortgages, especially for seniors. Recently, Jon, you won a really cool award.
Thanks. We were pretty shocked. We were number one in the country for our company for the first 3 months of the year. So that was impressive. I mean, we have some high dollar loan amounts here in Santa Barbara, and that definitely helped. But it's more appreciative of all of our clients and agents that support us here in town. So thank you. You know, you're a part of it as well, so we appreciate it.
Oh, absolutely. And it was fun to open up the paper and see your picture smiling there and grinning. So congratulations. That's a huge deal, Jon.
Thank you.
Yes. Today, we're going to talk specifically about seniors and how mortgages might be a part of their process when exiting out of a house. So we're going to concentrate on maybe 5 things that you might suggest for seniors to start thinking about, if they're going to be getting a mortgage?
Yeah, that's a great question. I think 5 things that I would focus on more, because it's more of a preparatory phase, I think, for them. You know, they have a home, they're not rushing to buy something. You know, we're not in escrow for a typical 30-day period. So making sure that you have tax returns, trust documents are important. Any kind of legal paperwork that you might need to issue, bank statements. But most importantly, the one that I see the most troubles with, online logins and passwords. Most everything that's done in the mortgage world is obviously digital. Same with online banking. So if you have that organized up front, maybe even just a one piece of paper where you can have all your username and passwords organized and fixed, it's going to make the process a lot smoother. It also eliminates stress during an already potentially stressful time.
Well, I'm glad that you brought that up because that is something, the passwords, sometimes you have to update those, you get locked out of your accounts. So thinking about that before and maybe getting that, like you said, on a little cheat sheet of paper somewhere, those little tips are always very helpful.
Time saver for sure.
Specifically, we're going to address clients that I'm working with, seniors who are selling their home, but they're not ready to actually sell the home. Perhaps they're going to be going to one of the senior communities, Casa de Rendas, the Samarcan, Valverde, Vista Del Monte, Maravilla, one of the campuses, and they're not going to sell the house, but they need to access funds. Mm-hmm. So let's talk a little bit about how Prosperity Mortgage and you have programs in place that might be helpful.
Traditionally speaking, a lot of people in that situation, seniors generally are on a fixed income. They might have a lot of assets in retirement accounts, and generally liquidating those assets could create a taxable event. So we don't really want to touch them. So the equity in the home is what's more usable and less expensive to access. Also, we need to do that respectfully to their affordability and the fixed income as well. Just because they have the money doesn't mean I should get them a large loan. It's more about what can we do smoothly and easily to get them to the next step. Each client's a little different. Some people have a lot of assets, some people don't. But the biggest thing we look for me, is essentially the least taxable event occurrence. I don't want them to pay any fees that they don't need to. The lowest fee structure for the loan, and then also ease of use. I mean, there are plenty of loan products out there, and every client's going to fit into a different box of what makes sense for them. We have some people that have to get a whole new first mortgage. We have some people that get an equity line, and then other people that use bridge loans to purchase a new home potentially for downsizing. It just depends on their individual needs. I'd say we probably have 6 or 7 options that kind of fit in most people's buckets. But generally speaking, I think ease of use is a big one. And then also kind of more a hands-on approach. I still meet people face to face, one-on-one, just because it's almost faster to do it that way. But people like that old-fashioned touch a little bit. So we try to do it a little bit differently to make that smooth and seamless.
I mean, absolutely. As a senior realtor, it's really important to me to take the stress out of this process for seniors. And oftentimes I find seniors who they want to sell the house, they need the equity out of the house, they have to make maybe a substantial down payment into their senior community. And like you mentioned, they don't want to get into maybe their portfolio and pull out funds. It's almost, like you could just ease that process along. And we had actually a wonderful client that we helped recently that needed that exact scenario, needed to pay her down payment into her senior community, but didn't want to get into her portfolio.
Yep.
Let's talk a little bit about that situation.
Sure. She was a perfect example. She had a large retirement account from years working at a university. She's taking her distributions that she's required to take. She has Social Security and a small pension. Not necessarily enough income to qualify on paper with her tax returns for that mortgage. So we used a product called asset depletion. Basically, we take a theoretical formula off of her assets she has in the banks, divide it by a number, and that's what her new income, so to speak, is on paper to qualify. That allowed her to stay in the home while you work through clearing it out and helping her move. And then in about 3 or 4 months, when that home is sold, she can pay off the mortgage, put the rest of the money in the bank, and she's happily in her new home without disrupting her lifestyle.
Well, one thing that I really love about that was she told me, wow, the stress relief of her not having to worry about getting into her portfolio was a really big thing.
Mm-hmm.
And I remember you, Jon, specifically coming to her house and sitting down with her, at the table and helping work through her documents. It meant a lot because, her technology skills are pretty good, but just that little touch of you pulling up in a car, coming out to her place and doing that at the house was really special.
I think I made about 5 trips. So every time, if it was a signature, it was just easier to drive the one piece of paper over there, get a signature versus scanning and faxing, and just try to make it easy for them.
Well, and that is so important. And I really appreciate that, Jon, personally, helping my clients with that for sure. Let's talk a little bit about some of the myths that may be out there related to loans in general.
Yeah. With this overall topic we have of helping seniors and kind of transition in the next phase of their life, a lot of people always say, well, I'm retired. I don't have much income. I probably can't qualify. Or, I'm not working right now. I already own this home. I have multiple properties. A lot of people assume they can't. And I always make the joke, it's like going to the doctor. You don't know unless you get a checkup. So having the conversation to kind of alleviate the stress points for them and make them realize that there's plenty of options out there. Everyone always thinks, and I think this is the biggest myth, whether you're self-employed or retired, is I don't show a lot of money on my tax returns. I can't get a mortgage. Not true. The other thing, too, that I think there's a lot of myths about is people think of loans and they think, I've got to go to a bank because banks have the money. If you walk into most retail banks like a Wells Fargo or Bank of America, they don't offer that many loan products truly. So that's where companies like ours kind of come into play. So one thing that I'd say is another myth as well that most people always kind of get stuck up on is I went to the bank, I can't get a loan. Oh, shucks, I give up. Don't just stop there. You need to call someone else because there are plenty of options for everybody, whether you're employed or not, retired. And a lot of people in retirement still do have steady and significant income streams. Just where they come from might be a little bit more difficult to document for some lenders.
Well, I know that behind the scenes, you do a lot of things and you have a fantastic assistant, Johanna, that works with you. Talk a little bit about you and Johanna together.
Yeah, she makes my job a lot easier. Having 2 people, we're out and about for meetings, showings, whatever, events. In this case, I'm sitting here talking to you. She's still at the office. So it allows us to kind of satisfy everyone's expectations for speed, which is really important. A lot of things that we do are time sensitive. So having 2 people manning the ship is a big help, especially someone that I know that I can trust. And that also has the same line of thought as me. It's, put the client first, make it easy for them rather than just following a step-by-step protocol. Think a little bit outside the box on that.
John, today, there's a couple things, that sometimes are very challenging for seniors. We had talked earlier, identifying like what you call the pain points. Like, explain a little bit more about that.
Yeah. When we have our initial conversations with clients, we're going to go through a basic line of questioning. And usually during that process, I can kind of dig up what the problem is. What's the issue? Do we have an income issue? Do we have an asset issue? Do we have a credit issue? Time. What's our time frames that we have to work around? I try to look at that, and that's the one thing I solve for. I always use like the analogy of I'm solving for a math problem. What are my variables? So eliminating the pain point. Sometimes people are looking to solve the wrong problem and making things more difficult. So identifying the problem quickly or the pain point and working around that right away is probably the one thing I enjoy doing the most to make it smooth.
Well, I know my senior viewers out there, they're probably going to ask me, like, what would be the fees and the costs or the interest for, one of these loans where it's a short-term loan, it's just to get them from point A to point B.
Yep.
Go into that a little bit.
Sure. So if you're just doing a regular refinance on your home, like we did for that one client of yours, they're probably going to cost about $4,000 to $5,000 in transactional fees. And a lot of those are actually tax-deductible fees as well. Now, during the time that you are making mortgage payments, a portion of the mortgage interest you're paying is going to be tax-deductible as well. So that's a pretty inexpensive process in the grand scheme of things for the amount of money that you're most likely getting out of the home. Equity lines, if we go that route, are usually inexpensive to set up, and they only charge you a fee when you close it. And so that might be $2,000 to $3,000, depending on the size of the equity line. Now, on a grander scale, if we have to do a bridge loan, someone that wants to buy a new home without selling their old home, those fees can get sizably more. Depending on the size of your loan, I've seen bridge loan fees anywhere between $10,000 and $40,000. So the larger the loan, the larger the fee. Now, going back to my comment about trying to keep fees as minimal as possible, I just kind of I like to pick the least expensive option first. It may not be the easiest, but generally speaking, when you explain you have option A, B, or C, pick which one you like, they're going to go with the lowest fee, most likely. Yeah.
I know that sometimes that might fall under myths where seniors may think they don't have an option. And this is giving so much knowledge to our viewers out there about sitting down with you if they have questions. What's the best way, John, for folks to get a hold of you if they want to get, just to find out their options?
Yeah. I mean, if you Google my name, I'll pop up on the top instantly. Our company set us up for that. But my cell phone's always easiest. It's in my pocket pretty much 24 hours a day, unfortunately, but fortunately. So everyone can just reach out to me directly there.
Well, I'll also put a link in this podcast where people can click on it to get more information and also set up an appointment to see you.
Yeah.
One last thing. You've been here in Santa Barbara for how long now?
I moved here in October of 2003.
Okay. So what are some of the favorite things you love about living here in Santa Barbara and being with Prosperity Mortgage?
We'll do Santa Barbara first. So my biggest thing, every time I travel, I always look at my wife or look at Zillow and say, oh, we should move here. This place is great. And then I come home and our airport's 10 minutes from town and we have local owned restaurants. There's nothing more that I like to going to an actual local restaurant versus a big box chain. And I think that's one of the few things that we have here in Santa Barbara that makes us unique. With regards to Prosperity Home Loans, I've worked at about 5 mortgage companies in the last 15 or 16 years. Most of them are similar. They're selling the same products. The management structure is the same. The thing I like most about Prosperity is a lot of our management is based on the East Coast. A lot of mortgage companies are based in Orange County, Los Angeles. And I think it's a smaller, more down-home feel at our company. They're a lot more logical. We can ask for exceptions. I can get people on the phone because we're not so big. And we get a lot of leeway with pricing. And they really want to help any of the agents that we work with because they know that if we do purchase loans, it's going to lead to other transactions down the road. So they're really, really willing to kind of step up and help everyone out to make a deal work rather than just think of the numbers and that's it.
Well, I know that's why so many of our seniors do retire here in Santa Barbara. We have, excellent weather, the arts, we have wonderful food options, entertainment, and supposedly we have 300 days of sunshine. That's what they say.
Yeah.
We've had a little bit of cloudy weather here lately.
And we don't have to drive very far for anything.
Yeah. Well, again, I appreciate your time today, Jon, coming on the Senior Scoop. And we'll be doing a lot of helping seniors over the next few months. I know I have several clients that are going to want to talk to you. So thank you. Thank you for your time to come out to the studio.
Sounds good. Happy to be here. Thank you.
Right. We'll see you next time on the Senior Scoop for another informational, interesting conversation.